Assalamu alaikum, everyone, and welcome back to another episode of Market Talk with Musaffa, your deeply dive into halal investing, where the faith meets finance. And today's discussion is especially important because the markets are becoming increasingly volatile. We're seeing uncertainty from multiple directions, geopolitical tensions in the Middle East affecting oil prices, rising treasury yields, and inflation fears, which is one of the important things everyone watches on the market, and then cautious corporate earnings, and then election year uncertainty in the US also affects the market, right? All of these is raising this volatility and then our daily market watch and investment behavior, right? In the moment like this, many investors begin asking difficult questions. How do we invest safely? How do we stay disciplined? And for Muslims specifically, how do we navigate volatility while remaining fully Sharia compliant, right? To help unpack all of these, we're honored once again to welcome Professor of Finance, Dr. Murs Hatij. We'll discuss market psychology, risk management, halal investing strategies, why professionally managed halal portfolios may help investors navigate. So that's going to be our main topic today. And then if I introduce our professor, Dr. Muris Hadjic, he is a professor of finance with a deep expertise in portfolio management, finance, financial markets, finance in general, in investment strategies. He has spent years studying how the investors react during periods of volatility and uncertainty, and studying in general markets and then finance. And then if I say I give a few words for Professor.
Assalamu alaikum. Thank you again, Renat, and to Musaffa for inviting me. It's always a pleasure, an honor to be here and discuss things relevant for investors, for Muslim investors in the US and beyond.
Thank you. And I left the comments for everyone. So please, as usual, this is has become our tradition. Please always share in the comments where you're joining from, and I can put that on the screen. We can discuss all together. And as usual, we are always excited to have people joining from across the world, many parts of the world, and joining in and listening and learning about markets in general, and then importance for it for Sharia compliance driven Muslim investors, inshallah. So I have to make a small disclaimer as usual. Musaffa LLC is a US SEC registered investment advisor. This session is only for informational and educational purposes only, and should not be considered individualized investment advice or recommendation to buy or sell any securities. All investments involve risks as usual, including potential loss of principal. Please conduct your own research, consult qualified professionals before making investment decisions. And from here, I would be excited to start with the very interesting questions, inshallah, and then see where we're going to go from here, and then pick Professor Muri's brain on all of these topics. Interesting issue we're discussing today. So the first question, Dr. Murs, markets feel extremely sensitive right now. Every headlines moves the market. Why is the volatility so high at the moment?
So, we are in a period of a lot of uncertainty, and that usually is what drives market volatility. People see what is happening right now in the markets. A few important things that you'll see in the headlines. In the US, you have the Federal Reserve, the central bank. We have the new person in charge. So what he will do, how he envisions what the monetary policy should be, that's one thing. That's one level of uncertainty, and also political pressures, to call them that way, on the Federal Reserve and how he will react to that, the whole independence of the Federal Reserve. So that's all one package of uncertainty from a macro level. You have the huge, obviously, elephant in the room, the geopolitical situation that's happening in the Middle East, that's affecting obviously oil price, which feeds into so many different things, the prices and cost of so many different things. So that is another drag on already high inflation. So that's a huge point. And maybe the largest point of uncertainty, you have the fiscal responsibility or irresponsibility and huge debt on part of the US, which seems to be growing incessantly, also driven by all of these wars that the US is waging in different areas of the world, right now, in Iran and the area predominantly. And then you have a whole uncertainty about AI and employment, or more so unemployment. Both hopes and fears that this will drive productivity and growth, but at the same time, a lot of fear as to what's going to happen with the employment situation in the near and the long term.
Hmm.
And everybody knows what is happening. Nobody really knows what the ultimate outcome is. Everybody
Mm.
has a thesis, a view, stance. Some people are confident about it, but really nobody knows where exactly all of this confluence of effects is leading. So the market is reacting. It's very sensitive to any new headline that comes out, including tweets,
Yeah.
of people, especially the president, which just tells you that shouldn't really happen, not at
Hmm.
this intensity, but because of this uncertainty, markets are just moving like crazy up and down, day in, day
Hmm.
out. So
Yeah.
it's that different sources of uncertainty affecting markets right now,
Great.
globally and in the US.
Yeah, thank you for giving all the like the description and detail and touching each point. Which I actually was going to go in more deep, but I'll ask a few more
Mhm,
related to the points that you touched. So we're hearing a lot about the treasury yields rising
mhm,
sharply.
mhm.
Um, why are the bond yields suddenly becoming such a big concern for investors?
So bond yields, first of all, are very important. They're that foundational layer that affects the, obviously interest rates, but that just
Hmm.
feeds into cost of a lot of different things, cost of
Mm,
financing that, spreads. So if you look at, house financing, mortgage rates, that
hmm.
ultimately is affected by what is happening at the treasury level. And we are seeing that the treasury yields are right now at, almost record highs,
Mm,
and there doesn't seem to be any indication that they might go down. And the
mm,
reason behind that is, first of all, this fiscal situation with the U.S. government borrowing more and more, and
mm,
investors don't like that. The debt level in the U.S. is already very high. So even though it's distance, but the risk of default, U.S. government
mm.
defaulting, is slightly higher than it was 5, 10 years ago. So that
Yeah.
feeds into that, but more importantly, it's the expectations, and inflation expectations are really what is driving the yields and other interest rates, by extension. So
Mhm,
people, markets are pricing higher inflation expectation,
mhm,
and it's just what they're seeing, what is visible to them. Inflation, the existing price level is higher, and the oil price situation is just feeding more and more into that, which again just raises expectations for the future, higher prices, higher inflation, and
mhm,
that just feeds. That's one of the primary determinants of the yields, treasury yields, and other interest rates. So that's what we are seeing beyond the uncertainty that I mentioned in the first level. The uncertainty itself is causing this, but the primary sort of, when you lift the curtains, it's that
mhm,
inflation or inflation expectations that are usually the main driver, and definitely right now are one of the main drivers of higher yields. So we have a bit of a weird, almost unprecedented situation
mhm,
where you have, bond yields going up, which means that the
mhm.
bond prices are going down, and at the same time stock market, when you sort of take out maybe some few bad days, is really at the record high,
Yeah,
almost. So it's a
exactly.
weird sort of correlation or relationship between uh, the stock
The
and the
market.
bond markets, which
Yeah.
again is confusing to a lot of people, even professional, market investors.
It means like they used to always, for the whole past history, fundamentally, if you analyze the market, you
Hmm.
always took into, if the those yields, when they're going up, it's risky, the market pulls down, right? But
Hmm.
it's opposite, and they, even professionals don't know how to react, I guess. That's what you are communicating. Is that correct?
Yes, yes, and with that, obviously we see that the stock markets, at least in the U.S., are really driven by what we can call AI stocks, whether it's just
Mm,
AI,
mm,
the data layer, the infrastructure layer, the physical layer behind AI. All of those companies and their stocks are doing really well. They are doing well in terms of earnings, but the
mm-hmm,
stock prices are, I would say, unnaturally high. Even with that, and again,
mm,
it's not, I wouldn't call it a bubble, but given all what's happening in the world, not just with those individual companies which are
mm-hmm,
doing really well, like the macro situation makes that this price level in the stocks for those companies somewhat unnaturally high at the moment.
mm-hmm, mm-hmm. And then even in the situation when professionals, and as we discuss, we look into a lot of like aspects and then make a decision, or like more professionals take all this as a basis, and they're confused. You can imagine how retail investors could be confused when they start learning, oh, actually, when the uh, treasury yields are high, then I need to be being more conservative. When I don't know what's happening, even professionals are not clear about this point, right? So it's
Right.
creating a lot of this volatility and not understanding the market, I would
Exactly. I
say.
mean, it's, stock investing is a tough game to begin with for professionals,
Hmm.
amateurs, people in between. And now with this weird, for some people, new type of uncertainty, it's
Hmm.
definitely much tougher for everybody, including the professionals. They
Yeah.
just know, I guess, they have ways and mechanisms to deal with this better because they have been through seasons and periods of higher uncertainty. So they have a process, they have a method of how to deal with that. But it doesn't mean that they know exactly what they're doing. They just sort of know how to manage through it in a wiser
Mm-hmm.
way that has been learned through experience.
Yeah. So when the volatility increases, many investors either, what I know from my experience, either panic sell or freeze completely. They don't know what to, like, where to put, how to smart or
Mm.
smartly manage. From a behavioral finance perspective, what are the biggest mistakes retail investors make during such uncertain markets?
I mean, retail investors, unfortunately, are, quote unquote, the suckers in the financial markets,
Mm-hmm.
the sort of the default losers, unfortunately, because of
Mm-hmm.
exactly what you mentioned. It's a great question because volatility induces high levels of fear and makes especially retail investors do exactly opposite of what they need to do. I mean, to give
Mm-hmm.
a few sort of behavioral biases that have been research from a psychology, econ, finance perspective that affect retail investors. The biggest one probably is something called the loss aversion, which is the sort of the fear and the hurt you feel of losing money in the stock market. The intensity of that is so much higher than an equivalent gain. And
Mm-hmm.
studies shown that it's sort of twice as hard, like losing $10 in the stock market or 10% hurts twice as much as gaining,
Mm-hmm.
good feeling of gaining 10% or
Yeah.
dollars. And that makes people fearful and they panic sell, right? They
Mm-hmm.
do, something that they shouldn't do. So panic selling is obviously a big thing when
Mm-hmm.
volatility is high, which means stock prices go down, you sell at a loss when exactly the smarter
Mm-hmm.
would be not to sell or even to buy if you have additional liquidity to buy at those reduced prices because of volatility. One other thing is what's called recency bias. Whatever you
Mm-hmm.
see happening recently, you sort of extrapolate that and think, well, this is going to continue happening in the near future. So if the market went down, whatever, 3% last week, you expect
Mm-hmm.
that this week and so on, which obviously statistically is completely unrelated. But
Mm-hmm.
that's a big bias that affects especially uh, uh, retail investors. And then it's probably something that people will understand is being affected by the headlines. Trading on the headline
Mm,
is a
mhm,
big mistake that investors make. They sort of read what's happening or what some other investors might have done, big names or somebody in their environment, and they try to copycat
mm,
those decisions, which again might be completely opposite of what they should be doing. So that's why having a bit of a process, a bit of a consistent pattern in how you invest, which you set for yourself, is really important. But for retail investors, that doesn't exist for most
mm.
investors, at least.
Yeah, that's sadly what we learned. And also, you mentioned about the recency. Um, what I learned from a previous session that we had another expert that we invited. Market usually looks forward, right? Market is our forward looking. That's why they grow. They think about this AI that is going to make the changes. Economy is going to grow. It thinks about, or like this conflict is going to stop. So it's about the forward looking, right? Because the conflict has already started. It's past. They don't look at the past because they look at that it's going to end and then it's
Mhm.
going to grow again, right? So it's always forward looking. And then, but the investors, they are unfortunately recent what is happening around them. They're affected by this, and they lose on it. Unfortunately, I totally agree with you. It's such a point.
Right.
Um, so many Muslim investors, because our audience are Muslim investors, are relatively new to stock market because
Mhm.
Musaffa is bringing them. Many other Islamic fintech companies are bringing them to the investment.
Mhm.
During periods like this, how important is discipline compared to trying to perfectly time the market?
I mean, in investing, not just now, when markets are calm, when everything is rosy, discipline is still everything, let alone now.
Mm,
Trying to time the market, even for the most professional investor funds, people have all the resources, is still that holy grail, which doing consistently, I would say, is impossible or very close to impossible. If there's
mhm,
some people who have been able to do it consistently for a few years, they will not advertise that. They will keep it on the down low, because as soon as you advertise that, you lose the edge. So, but in general, I think it's impossible or close to impossible, because markets are millions of people that have their own views, decisions, biases. So it's practically impossible to predict that. That's why discipline and having a process in how you invest, having your
mhm.
sort of investment philosophy, and following that philosophy is extremely important. And that's what makes you disciplined. Like, you
Yeah.
think of writing a set of rules. This is how I invest. These are my rules. This is what I invest in. This is how I manage my risks. This is what I do when things get really bad or when things get really good. You have a set of rules. Think of it, your own personal investing constitution, and you
Hmm.
follow that. And it doesn't mean that you're going to always be winning, right? On paper,
Yeah.
sometimes your portfolio will go down. It's the long term that matters. It's that consistency and commitment that makes great investors. And look at, Warren Buffett's and such. They exactly advertise that they're very long term investors. I mean, Warren Buffett, I think Coca-Cola, he's been invested in Coca-Cola, I think, since the 80s. And
Mm,
Coca-Cola, if you look at the chart, has been consistently going up, paying
yeah.
dividends, right? As a stock, it's a great investment. But I'm
Hmm.
sure there have been, times when it goes
Hmm.
down. It absolutely doesn't matter. A disciplined investor, if they're done their research, follow their process, they don't really care about small dips or
Hmm.
periods of uncertainty, because their process will really make them long-term gainers, will make them, will increase their wealth, increase their portfolio. But it's important to follow the process. Trust yourself and the rules you've set before you started investing.
I totally agree. And discipline, I guess, in any parts of our lives is helps, right? Whether you go to military, whether you go to studies, you're going through your studies of 2, 3 years.
Mhm.
Always discipline is the one that saves you in every occasion, right? The same thing is with the finance, I
Absolutely. Yeah.
believe.
Discipline, even if it's, when you learn something or you want to form a habit, it's important to, do it every day, even if it's for, 1 minute, 5 minutes, 10 minutes, depending on what the thing is. And that's the Quranic principle. A bit
Hmm.
every single day, just continuously a bit, will form that habit, will help you learn, will help you become better in whatever area of life. And investing is no different, right? It's that
Yeah.
continuous path of sticking to that practice that will ultimately result in good outcome.
Exactly. So we mentioned a few times safe investing, or like how to invest safely. So when people hear the word safe investing, they usually think about like gold, real estate, REITs, ETFs, bonds, or some commodities. These days, about like these gold and silver, etc. From a portfolio management perspective, in general, how should the investor think about the safety today? Just a few general your thoughts.
hmm So if you look at the practice and even textbooks of portfolio management, investment management, you have that classic 60-40 portfolio that invests
Mm,
in portfolio of bonds and stocks. Bonds are very safe, stocks are more risky, but that combination makes your portfolio fairly well protected. And
mhm.
that's what traditional finance advises, which is a good advice, or has been good advice. Now, not necessarily. The 60-40 portfolio is not really a good advice anymore, especially
Mm,
nowadays, which obviously for Muslim investors, we can invest in bonds. And
mhm,
unfortunately, we don't have a huge market for sukuk, sort of the Islamic bond yet,
mhm,
to have enough of volume and liquidity to sort of mimic
mhm,
the 60-40 stock versus sukuk portfolio. So Muslim investors, they have to be even more careful when it comes to safe investing, quote unquote.
mhm, mhm,
So, what are the general rule there? First of all, again, have your rule book, your playbook that you follow. But
mhm,
beyond that, that playbook needs to do a few things. It needs to push you to diversify, right? Even though we're limited, right? We cannot
mhm,
invest in bonds, and within the stock universe, we cannot invest in all stocks. Within the ETF universe, we're limited. REITs, we're limited, but we still have. When you combine all of that, it's still a pretty decent and very well diversified universe of things you can invest in. So we
mhm,
need to diversify. We need to invest across different sectors, whether it's stocks or ETFs, different geographical regions. We need to think of investing in commodities, in real estate, as you mentioned. Things ultimately, the holy grail of having a good, diversified, safe portfolio is having uncorrelated assets, or
mm,
assets which have low correlation. And it's not easy. Anybody can do that analysis, finding two assets, let's say gold and the stock market,
mhm,
and thinking, well, it's going to have a negative correlation because the theory says that. That's
mhm,
very difficult. You don't necessarily find negative correlation between things, which is exactly
mhm,
what you want to have in your portfolio. Things which
mhm,
move in opposite directions protect your overall portfolio really well.
mhm,
But we need to strive to do that. We need to have things in our portfolio which, over the long term, are not correlated, have low correlation, even negative correlation at times, and that
mhm,
protects you. Which means, right, in practical terms, your portfolio should invest some in growth stocks, right, the AI stocks
mm,
right now, but not
mhm,
just that. At the same time, invest in some sort of Coca-Cola type stocks,
mhm,
growing, mature companies that pay high dividends. Those are the
mhm,
safe stocks, quote unquote. Invest in them. Invest bit in emerging stock market. Again, not too much. It's considered to be riskier than the U.S. Overall. But then have some commodities, have some gold, have some silver, have some real estate, whether it's through REITs or some other methods. And as markets develop, uh, having access to some other sort of alternative investment options,
mhm,
portfolios which invest in private equity and whatnot,
mm,
having a small, percentage in that also helps, because those, are riskier, but the upside potential is really large. So investing a bit in that also, helps the growth of our portfolio, but still protects us if we have, a meaningful but small percentage invested in that. So the whole point is diversify as much as possible across different dimensions, asset classes, regions, and so on, sectors in the market, and make sure to set some sort of ground rules in terms of constraints. So you
mhm,
cannot have your portfolio as you invest, especially some people have it, automated or semi-automated. You cannot allow your portfolio to, be 20% invested in one single stock, which can happen over time. If you invest in a really good stock and it grows over time, it can become a huge portion of your portfolio. So some rules like that, some minimums and maximums as to how much maximum invested in a single stock, in a single sector, in a geography, in an asset class, and so on, just helps solidify that diversification in your portfolio.
Great. So you described a lot if the person is doing and then gave this a little bit foundational explanation.
Mhm.
But if we compare it to someone, if that person is being helped by professionals,
Mhm.
so how do the professionally managed portfolios by, let's say, robo advisors or any advisors differ from someone simply buying a few stocks and or ETFs and themselves hoping for the best, or like following these practices? How much is the difference of winning in one case or another case? What do you think?
I mean, it's a huge difference. One is if you are doing it professionally, you're doing everything to set yourself up for success. If you're doing something, on your own, investing in few stocks and ETFs, even though they might be good investments, the process, you mentioned hoping for the best is not how you start investing. Like, so those professional investors, robo advisors, whether it's manual, or semi-manual process, all of them will start with like something called the investment policy statement. That's the playbook,
Hmm. Hmm.
and they follow that. And whether they automate the process, semi-automate, do it manually, it really doesn't matter, because they've thought beforehand of all of the contingencies and how to work around them, and they're not hoping for the best. They set themselves
Hmm.
up for the best given the type of sort of risk return framework they want to operate in.
Hmm.
Retail investors cannot do that. And one other thing, huge constraint for retail investors is the amount of research. If you really want to do a good job
Yeah.
and you know what you have to do, even with that, just doing everything, doing all the research, making sure you follow all the news. And even if you want to automate stuff, now with AI, people who are AI savvy, it still takes a lot of time, just monitoring the market, tracking everything, and then ultimately deciding what to invest in and investing. It's still, it's at least a part-time job, if you're doing it for yourself only.
Yeah.
So, having professionals do it, you know, just makes it easier and gives peace of mind. When you do it yourself, even if you do a good job, you cannot sort of ignore the stress that comes with doing it yourself, actively, continuously, every day or every week.
Exactly. And this brings me to another question, which all of these professionals use, as you mentioned about the policy that we set, as Mustafa as well, all posted. We have like very disciplined approach. What role do the rebalancing, because we involve a lot of rebalancing and continuous monitoring that we do, play during actually this volatile periods that we discussed above?
I think it's extremely important, especially for Muslim investors, for two reasons. One, the fundamental reason is Sharia compliance.
Hmm.
Forget market, just making sure your portfolio is always Sharia compliant. You have that sort of layer of rebalancing.
Mm.
Halal stocks, some of them might, dip into the, haram region temporarily. You have to take them out, put in some new stocks. So you have to monitor the, halal universe of stocks and make sure you only invest from them. But then the second layer, which is really managing your portfolio, rebalancing is extremely important. And you have two extremes: rebalancing too often, what just
Mm.
introduces costs. Whether a lot of times that's not really necessary to rebalance a lot.
Mhm.
So that just adds a lot of turnover, which introduces cost into your portfolio, and including opportunity cost, like losing on potential long-term growth of
Mhm.
certain investments. Uh, but somebody who's managing a portfolio and who has a long-term perspective
Mhm.
will rebalance during these times of uncertainty in a way that is usually opposite to what the retail investor does. So
Mm.
that well-known mantra, buy low, sell high, that's what
Mhm.
rebalancing does. And retail investors usually they sell low, buy high, right? They buy
Mm.
when there
Mhm.
is like positive sentiment in the market. They're in the news. Nvidia did really well. That's when they buy Nvidia when it's already high. But a manager who's managing professionally a portfolio of some sort will look at the periods right now and will look at stocks which have gone down, do their research, see fundamentally that the stock, that the company is really good. You buy it when it's cheap, right? And then you continue
Hmm.
holding it, and ultimately the market will, you know, sort of go beyond this period of uncertainty, and those stocks, if they did a good research, will do well. So they buy low, right? Especially when
Hmm.
the fear is high, and they will
Hmm.
sell high. Right now, if a stock has
Mm.
done well, they want to sell that, rebalance into cheaper stocks, and long term that creates for a great performance. uh, Warren Buffett has a saying about that. What was it? When everybody's fearful, you want to be greedy. I don't like the term greedy, but the
Yeah.
point is, when everybody's fearful, like right now, you go and buy, right? You buy
Mm.
stocks which are in relative sense cheaper than they
Mhm.
should be. And
Mhm.
long term, that's exactly what you want to do. And professionally managed portfolios strive for exactly that. And they have the tools, the resources, and the know-how to follow that sort of overall principle and process.
Yeah, I totally agree, and thank you for giving that neutral perspective. But from Musaffa, of course, I'm biased, and I want to share with everyone what one thing we recently launched, one of the
Mhm,
biggest launches yet at Musaffa, which is our ready-made halal managed portfolios designed for different risk profiles that you talked about, and investment goals. Actually,
mhm,
we will be introducing the goals as well. I will just show the glimpse of it. I'm not going to go too much, but I want to invite you to discuss while I'm sharing it with the audience. So this is going to be, and if I move it around a little bit, so when you come to our managed portfolios page, this is introductory page, of course, but when you click start investing, explore portfolios, it will take you to inside of the platform, the managed portfolios, where you can actually buy those managed portfolios, and then invest certain amount, and we manage it from there. As you can see, it's a fully diversified, everything thought through, auto rebalanced at the time when we need it, and there's a constant monitoring by our team, and then purification included. And then Sharia, it's built on Sharia compliance, right? So and then we have this US core. This is for US market. So any US, you want to benefit from US market growth, you come to this one. Then we have US growth. This is high growth potential for long-term investors. And then we have income, which is designed to return, like it's a passive income. Your investment keep growing, but you also get some money because it's based on all dividend. And then we have this US innovation, because people are so much interested right now with AI and technology. And then we decided to give the access to these type of investments as well. But this is, as we discussed all of these points, right? We discussed there should be some portion of your investment that protects you, and that is also included in here, built in. There's supposed to be something that you want to benefit from, most secure ones, let's say some commodities, that one is incorporated, and then based on your risk profile, it automatically adjusts. And then here around more than 300 stocks are included, all of them Sharia compliance. But for you to pick always and then monitor them and then remove them when it's needed, it's almost impossible. Even for some new professionals who never dealt with the Sharia compliance, it's even complicated for them, which Mustafa is handling here. And then we're so proud to introduce and then help our ummah with this. So I have a question on this point for you. So
mhm.
for even busy professional family, like professionals, I mean like doctors, lawyers, etc., or the Muslim families and newer investors who may not have time to constantly research market, what are the advantages of having these expert continuously monitor and then rebalance portfolios on their behalf?
I mean, this is honestly just beautiful. We don't really have something like this in the market. I mean, what we have right now for halal investor in the US, you either buy, a handful of ETFs, which are branded halal, SPUS, Halal, which have been in existence for about 5, 6 years or so, and you have a small selection of mutual funds. That's it. So investors, especially if you're thinking investing to your retirement accounts, you don't really have any options like this. So if you want to invest as Muslim Sharia compliant investor, there's nothing that offers this unless you do it yourself, from at least that I'm aware, or maybe you can go to a financial advisor that happens to be Muslim and you get sort of one-on-one customized solution, which probably costs a lot of money, and you have to interact with them. But having this sort of automated process where you can track things real time, and from the get-go that everything is halal. Even with financial advisor, you don't really know if everything, what the processes that they follow. You have to sort of monitor them in a way. But this, I mean, this is, I think, a dream come true for Muslim investors
SubhanAllah.
in the US and globally, really. To have access to the US market, the most developed financial market, and not having to think about, just that Sharia compliance layer. And on top of that, having an actually professionally managed portfolio long term that gives you different options based on your appetite, risk, and preferences towards return. I mean, it solves a lot of problems that Muslims have been having. I've been hearing about this forever, and to have a solution where you can just point to a
Yeah,
platform, a website, and say, or an app, and say, hey, well, go invest there. Like, you have everything done for you, and it's probably going to be more cost efficient than any other solution of this type
exactly.
you can find in the market, which will have to be customized in some way.
Yeah, I want to buttress your last point, because what we did and what we noticed on the market, um, any portfolios that are Sharia compliance, we don't want to discount their work. Of course, everyone chooses their own, but what we found, there are no stocks involvement. Everyone who puts their managed portfolios, even robo advisors or other Sharia compliant advisors, unfortunately, they have only ETFs, but ETFs also builds additional management ratios, right? It becomes a little bit expensive. And also, ETFs, you cannot monitor internally every stock, how to,
Yeah.
let's say a big stock becomes non-share compliant, how they're going to deal it, because it's only invested in ETF, right? And they cannot remove entire ETF from the list of those assets, right? So that's why we gave the actual the Sharia compliant portfolio that is built for Muslims, and that takes into account all of these points that you raised, inshallah. So that's what we've seen that market is missing. There's no such managed portfolios where you have around 300 stocks specifically in the portfolio. It's, of course, you relatively on your risk profile differs. Sometimes it could be only all the stocks, only 30%, right? And there could be a little bit more ETFs because people want to stay a little bit risk averse. If you want to go big, if you are like aggressive investors, you choose almost like 90% of the stocks, but those stocks are picked Sharia compliant, and the Sharia compliance are they don't have much of debt. They always perform better. So they're handpicked, right? Our team worked very hard to pick the best ones, alhamdulillah.
Mhm.
But of course, we all follow this investment policy that we set, because this is our role as a registered investment advisor. We have to act it that way. So we discussed so many interesting things. I was not even expecting that it's going to go that much
Mhm.
interesting. Professor Maurice, I want to ask you two last questions, which are very, very important.
Mhm.
So, given this kind of managed portfolios, given that this kind of professionally managed safe investing, safe, of course, like it's relatively safe. Always the safety can be measured differently for each person.
Mhm.
I don't want to say to investors because I need to disclose the disclaimer, right? So, given this all properly managed, always monitored, Sharia compliance, managed portfolios. Can volatility actually become an opportunity given all of these for the disciplined investor if they take advantage of managed portfolios like this?
Exactly. Volatility is an opportunity for people who understand it.
Mhm,
Even if you follow something like a simpler approach, like dollar cost averaging, right? Meaning
mhm,
you invest in the same sort of set of stocks for some time, and whether they go up or down, let's say every month you spend
mhm,
$200 on the same stocks, right?
mhm,
Whatever the price is, that's dollar cost averaging. Even that
mhm,
approach, which is sort of semi-passive, long term will give you that growth because it uses volatility and price drops as an
mhm,
opportunity to buy cheap.
mhm,
Obviously, when you move one step further and have a managed portfolio by individuals who keep track of the market, they're not on autopilot. Uh, that just compounds how well that opportunity can be used and long term give you very large gains, again given your risk appetite. And one thing that's important to understand, and I like that, below those portfolio options you have like the horizon 5+ years, 7+ years.
mhm, mhm,
That's extremely important to understand. If you want to really benefit from a strategy, especially slightly riskier strategy, your time horizon needs to be larger, and you will benefit from that.
mhm,
As people who invested in the Nvidias of the world, the Googles, the Amazons, when they were
mhm,
still young startups struggling, burning cash, uh, right, or even cryptocurrency, but people who stayed in the market, they won big. So it's extremely important to have that philosophy of a long-term investor and not a short-term investor who's sensitive to headlines and what's happening in the moment. You sort of have to an extent have a policy of invest and forget, especially when
yeah.
other people are managing that. You're not really forgetting it, but you know that the job will be done for you, and with that long-term perspective you really can't lose. Like long term stock market has historically done really well, so just stick with the process, and the portfolio will grow, the wealth will grow.
Inshallah, inshallah. So we're coming towards the end of our discussion, which was an incredibly interesting for everyone who's listening. And I usually always ask this last question: if you had to give one final piece of advice to Muslim investors today, what would it be, Professor
So
Nice?
maybe maybe two things. First of all
Okay.
is, and I think I'm seeing this personally, like in my sort of network of people that I know, friends and acquaintances. One thing is to start investing, right? Even if it's that one single ETF, start investing, right? I think we are definitely lagging behind when it comes to just that. Be invested in the market. And obviously, second thing is once you dip your toes in the market and start investing, and people will make mistakes. I did it myself. Even with
Hmm.
all the stuff that I've learned and know about finance, I went through the phase of all of those biases that I mentioned. And I
Yeah.
think for some people, you just have to go through that to come to terms and really understand and apply what I'm saying, the long-term perspective. Don't let the volatility affect you. Market timing is impossible. All of those things you learn best
Hmm.
if you make some mistakes, but learn from other mistakes and really start investing. And when you start doing it smartly. Be diversified. Have your goals, have your playbook for investing. And if this is beyond you, like if you really have no information, no knowledge, no experience, then let professionals manage that for you. And alhamdulillah, now we have some options, whether it's ETFs, mutual funds, or now managed portfolios for Muslim investors. Use one or more of those opportunities, and inshallah, in 5, 10, 15, 20 years, our
Inshallah.
portfolios will grow and our wealth will increase, which we as ummah, as Muslims all across the world, we need to pay attention to that. Wealth is an amana for us, so we need to think of in those terms, not just those stock investing. I don't really care about that. Investing and increasing our wealth for the health and benefit of Muslims now and in the future is one of the core pillars we should think of strategically as an ummah. And this is a way to start investing, and then start investing wisely with the options that alhamdulillah are available right now for all of us.
SubhanAllah. Thank you so much. I actually started this market talks with the only one intention because I'm the one of the busy person in Musaffa. I do a lot of compliance, but I said I need to share something. If someone cannot do it, I will do it. A bit because we need to share the knowledge with Ummah, right? And your role as you chose to educate people, you feel it yourself that we need to educate people, and especially Muslim ummah who is falling behind. That's why every time I come to this market talks, I want to share more. I want to invite more, and we will be always happy to see you again, Professor Maurice, because our discussions are so informative and so helpful for our community, and we always benefit from that. I will all be always happy to invite you again and again, and let's discuss and educate our ummah, inshallah.
Absolutely, always happy to join and do whatever I can. Any small act, if it can help, people
Inshallah.
and myself understand what our goals are in the ummah, and in this case, from this financial and wealth perspective, I'm more than happy to contribute in any small way that I can.
Inshallah. Thank you so much. And before I end, as usual, we have a discount code. You use it when you go to the through website. You can put this MAR Talk 10, and that will give you a discount of, I believe, around 10-20%. Please check it. So this is for you to come and then listen to us as well, just small gift as well. And thank you so much one more time, Professor Moose. And thank you so much for everyone who's joining and listening us. You have a wonderful rest of the day. And we end it from here. Thank you so much.
Absolutely. Assalamu alaikum.